Hi, my name is Kevin Kleinman, head trader at Watchhimtrade.com, a live trading website that shows you how to kick the market's ass one day at a time. Tonight, I am going to take a look at Netflix. Specifically, I'm going to analyze whether or not the stock is bottoming here and setting up for another run, or on the verge of going back below $400. Looking at a simple chart of Netflix, so you can see the current price is $430 on this date, August 6, 2014. When trying to determine the direction a stock is likely to travel next, you want to identify certain characteristics a stock has displayed over time. In the case of Netflix, I am going to show you in this video a volume pattern that has consistently marked bottoms for the stock since it first started trading back in 2002. So right now what you are looking at is a daily chart of Netflix from way back in 2002 when it IPO'd. Netflix's first major bottom occurred on October 7th, 2002. It's this volume day right here in association with this candle. That date is October 7th, 2002. Now, what I want you to notice is that the volume on this day was the highest it had been in months. And also notice that the low from that day, which is right here, it was $2.67, was never meaningfully penetrated on a closing basis. In other words, you never saw much continuation lower. On this day, October 9th, 2 days later, Netflix closed at $2.62, 61 cents rather, but that was only 2% lower than this high volume down day. Alright? So that was the first time we saw evidence of a bottom. And if you just put a trend line there and you put a trend line on the volume, you can see that up until that point you really didn't have high volume like that anytime previously on Netflix, and you never really penetrated that low. So, two observations that I've already touched on but are very important to note, because these are the first characteristics that Netflix displayed in its history off of a bottom. Number one, the low from the bottoming day wasn't penetrated by a meaningful amount on a closing basis afterwards. So after you put in that day, after you had that day, you never really went below it on a closing basis. Secondly, the down volume day on October 7th, 2002, which again is this right here, is the highest volume day compared to any other previous volume on the stock. So let's now take those characteristics and see if we see similar instances. You don't have to look very far, okay? You can already see on November 19th, just about a month later, you have this huge volume day on Netflix with a down day, okay? And we know that previously on October 7th, high volume, down day, that is a potential sign of a bottom. The key is to not see that low, then get penetrated after the fact. Well, if you just draw a trend line out here, you'll see that this low never got penetrated, and it did indeed end up marking a very good bottom on the stock, and gave way to a very, very good move to the upside. You can also see just about the same thing on January 16th, 2003. So again, here's the pattern. High volume, highest previous volume. Here's the down day. Now this one's interesting more so because you do get penetrated, right? You go below it somewhat, but only by 4.5%. You closed that day at $6. The lowest you went on a closing basis was $5.70, so 4.5% drop from there. And again, if you just draw a trend line from that low, you'll see that you never gravitated too far away from it. You never went, way down, and that also did end up marking a bottom. So early on in Netflix's history, we're picking up on some potential characteristics that the stock shows with bottoms. Now we're going to look a little bit further at some instances that might be standing out here to you that didn't mark bottoms, okay? And want to point out some of the differences that we have. I'm going to talk about March 3rd, 2003, which is here. Also March 28th, 2003, which is here. And April 22nd, 2003, which is here. So we're talking about 1, 2, and 3. Now some differences that we have here on this. Number one, it's related to the volume. Okay, notice that these volume days that I pointed to on those dates where it is high red volume, right, just like the previous bottoms. However, the difference is these days were exceeded by greater volume on previous days, right? You can see these higher volume days just before those big down days. Also, the lows from these days were exceeded. So the differences is relative to how much volume occurred in the days leading up to this potential bottom, which in effect nullified it as a bottom. So as a result of this volume not being the highest the stock had seen most recently, neither of those marked trustworthy immediate term bottoms. So, we see that bottoms in Netflix have occurred on a high volume down day when that down day doesn't then get breached by a secondary down day, and when that high volume down day isn't surrounded by a higher volume day. So the thesis would be that if that high volume down day that marks potential bottom does get breached, then it isn't a tradable bottom. And if that high volume down day is the only volume, is the highest volume you can see on the chart, and it doesn't get breached meaningfully on the low end, then it is a tradable bottom. So let's jump ahead a little bit to 2004 now. Alright, so remember what we're looking for. For bottoms, we're looking for high volume down days that are the only high volume where then the low doesn't really get breached. Well, we have our volume criteria matching up down here. This is on April 16th, 2004. We have it again here matching up. This is on July 16th, 2004. And we have it again matching up on October 15th, 2004. Now, the problem with all of these days is when you stretch out the lows from those potential bottoms, they all get breached. Okay? They all get breached. So while the volume criteria was there, the criteria on the price side was not. Again, this is in 2004. So therefore, we do not have tradable bottoms because volume and price is not lining up how we need it to. So we've looked from 2002 to 2004, and at this point we have some characteristics we've seen from Netflix in terms of its trading history. The main characteristic is that when the stock bottoms, it tends to be on a high volume red day that isn't exceeded by any other nearby volume day. In addition, the low from that high volume red day tends to hold on a closing basis as support for the stock. On failed bottoms or continued downside, the high volume red day is matched by an equally or greater volume day, and the low from that day does not hold. So now we fast forwarded to 2010 to 2011. Netflix is in the midst of a monster move. We are right now looking at late 2010, early 2011, and we find the stock consolidating around 580. This is right here, okay, I'm talking about. So let's look for those characteristics. Again, this is 5 years later, right? But let's see. Check out December 17th, 2010. This huge high volume red day right here, which lines up with this day here. I'm going to draw a trend line off of it. Notice that the low from that day on this very high volume was $180. On a closing basis, the lowest Netflix closed was $178. So to me, that qualifies as not breaching the low. Later on, you moved a little bit lower down to 175. But still, from 180 down to 175, we're still talking about a drop of less than 3%. So to me, that qualifies as not breaching that high volume down days low by a meaningful amount. As a result, stock ended up bottoming, just like similar days back in 2002 and 2003. Now you move forward a little bit. You have this day here on April 26th, 2011. We see literally the exact same thing. This time it's made a big move up from 190. Now it's up to 250. It suffers a big drop from 250 down to a closing low of 228.90. But again, you put a trend line out there and you can see Netflix barely exceeds that low on a closing basis. In fact, it never does exceed that low on a closing basis. Ends up marking a bottom for the stock as it then continues to rally all the way up to $300. Now where it gets interesting is when the first sign of trouble starts to pop up here. And that comes on July 26th when an apparent bottom gets breached. What I'm talking about is this day. Oop, didn't want to go that far. This day right here. You can see high volume down day, so the volume criteria is there. At first we hold the low and bounce up, but then about a week and a half later Netflix starts to breach that low with this action here, so that negates the bottom. So right away when that happened, anybody who had been studying the stock's characteristics since its inception knew that that was a major warning sign for the stock, and it is likely to trade lower. And sure enough, you go up a little bit more, you can see the selling starts to get exasperated on now September 15th, where you have another super high volume down day, but that low doesn't hold. It starts to have a panic drop here. You breach that low meaningfully on a closing basis. You're down to 160. Now think about this scenario. Netflix had just dropped from 220 to 160, okay, in about 2.5, 3 weeks. That's a huge drop. Most people were probably thinking, okay, it has to bounce, right? Well, people who were familiar with the stock's trading history saw that this breached the bottom, or the potential bottom, by a meaningful amount, and that is no good. All right, and then sure enough, you dropped another 40 points from 160 down to 120 for another 25% drop in just a matter of days. So Netflix ends up pulling back big time from 300, and we show this drop here. And now we're looking for signs of a bottom, okay? And you don't start to get any until 2012. But in 2012, we do start to see some potential signs of Netflix bottoming. It starts here with this day. You have a high volume down day. All right, that's our characteristic. We have the price level. The price, though, does kind of get breached. So, not really what you want to see. But then, just about a month later, you have another potential bottoming attempt. This time, the first day in September in 2012, on September 4th. The low is $53.13. And you can see Netflix never closes below that low. As a result, that did end up marking a bottom for the stock. It rallies up to $80. Then, a big pullback October 24th. Stock gaps down on very high volume. The volume isn't exceeded by any other day previously, okay? And that low ends up holding and indeed marking a bottom for the stock. So those characteristics that showed up in 2002 when the stock was first trading also show up in 2012 when the stock starts to bottom. So now we've bottomed out. We've gone from 60 bucks on up to nearly 200. Okay? This is in 2012 going on 2013. But then in April 2013, you have another big drop. However, notice again, the price level on that day, this is April 3rd, 2013, the low from that day was 164. The lowest Netflix ends up closing is 163. So it never really breaches that 164 low, ends up marking a bottom. The stock then goes from 160s from April 2013 up to 250s the next month in May 2013. And you just see this pattern repeat itself over and over again. Now we're looking in July 2013. Big drop for the stock. The low is 246. On a closing basis, the lowest you end up closing is 241. Okay? That's only a 2.2% drop. Nothing drastic. So again, another sign of a bottom. You look down at your volume. Highest volume. It stands out. It's not exceeded by anything else. All those characteristics that I've been talking about that I notice from the very beginning. Now, here we go. October 22nd. Netflix. Big drop, right? Huge drop. Huge, massive volume. Ugly day. But again, the low on this day, October 22nd, 2013, is 321. Netflix, the lowest it ends up closing is 314. So we're talking about a drop of only 2.1%. That ends up marking a bottom for the stock. So, bottom line, since 2002, the characteristics with Netflix's bottoms has been consistent. They have been high volume that isn't exceeded by any other day previously. The low from that high volume day does not get exceeded in days following by a meaningful amount on a closing basis. Those are the two characteristics of bottoms. We've seen it time and time again for the last 10, 12 years from Netflix. I just showed you examples from 2002, 2003 that look the exact same now as 2013, 2012. Okay, those characteristics are still there. So now I want to use that information to figure out, is Netflix bottoming now? Okay, because something interesting just happened. You just had a very high volume down day, and the stock has kind of traded a little bit lower. We're talking about July 22nd. Just a couple weeks ago, the low was 425. However, on a closing basis, the lowest Netflix has closed is 421. So we have stayed within 1% of that 425 mark on a closing basis. And just today, Netflix popped back above 425. And to me, I would argue that if Netflix is able to stay around this area, around 425 on a closing basis, you are putting in a bottom on the stock right now. Other people are going to tell you, look at this head and shoulders pattern on Netflix. Okay, look how clear that is. There's the head up here, here's the left shoulder, here's the right shoulder. All right? None of that matters. The only thing that matters is what has mattered since 2002. When the stock bottoms on high volume and it's able to stay within that price range, it marks a bottom for the stock. So the way you want to trade Netflix is simple. If you see it holding around 425 on a closing basis, it's going higher. If you see it starting to slide below 425, getting some daily closes below 420, pressuring this recent low around 412, getting some extension on a closing basis, the stock can go lower. It's so important that it's on a closing basis because, you know, look at this day right here just last Friday where Netflix hit 412, right? So you were starting to extend below 425, but it's not where you closed. And what the price action since 2002 has shown us is that it's where Netflix closes, not where it goes. All right? So that's what I got for you on Netflix. I'm telling you right now, my bias is to the upside. This time last week, it might have been to the downside, but now we're back above 430. Now we're seeing price action that historically is in line with other bottoms. So I bet that the move is higher. As soon as that changes, as soon as we start extending below 425, maybe sometime next week we close at 415, I will immediately shift my focus and start thinking that Netflix is going back into this 380 to 360 range. But until you get some extension below 425, there is just simply no reason to be short the stock. Thank you for watching. Again, my name is Kevin Kleinman with Watchhimtrade.com, a live trading website that shows you how to kick the market's ass one day at a time.